Welcome to Fintech Confidential, bringing you the people, tech, and companies that change how you pay and get paid.
It's a matter of pride, it's a matter of honor to pay your employees on time. A lot of our customers would rather not pay themselves. Small businesses are owed over $1 trillion.
Whenever they're trying to figure out how do we scale this, we always look first at the culture.
These opportunities all have positive ROI. The inability to articulate to a bank.
Customer segmentation is often where they struggle the most.
The ideal Fundbox customer managing a team of 1 to maybe 20 to 50 employees. Their revenues may be a few tens of thousands of dollars a year, all the way up to maybe $5 or $10 million. We don't spend any money in direct marketing. Our focus on embedding financing solutions inside of the tools.
A really great approach by embedding into existing tools that they already have.
Trust is an important word here. Between the small business customer and the platform that they're using, the vast majority of SMBs are going to be using one or more digital tools to run and grow. 5 years from now, 10 years from now, that number should be at least 10x.
Are you going to be a vertically integrated company, or are you going to be a horizontal player?
Our average repeat customer uses us 6 or 7 times a year. From the very early days was the role that technology could play to level the playing field. That's what drew me to Fundbox from day one.
Hey, Ted Huff here. Ever thought about how you could streamline your application and underwriting process? Well, let me introduce you to Under. Why keep using the outdated methods of PDFs when you can digitize them effortlessly? All you gotta do is upload the PDF, send it out for digital signature, and voila, you're set for the digital age. Are you curious on how to make that happen? Head over to under.io/FTC and get started for free. It's really that simple.
Welcome to Fintech Confidential Series Leaders One-on-One, where we sit down with Fintech leaders to learn about what drives their passion for Fintech, their leadership lessons, and what drives their life through business. I'm your host, Ted Huff, and today's guest is Prashant Flordia, Chief Executive Officer at Fundbox. Prashant, thank you for joining us today.
Thank you, Ted, for having me.
You know, after spending over 26 years in Fintech and helping multiple companies scale their payment systems and optimize their user experiences across multiple verticals, I personally have learned that the most impactful leaders aren't always the ones who start companies from scratch. Sometimes they're the ones who see a mission so clearly that they're willing to leave everything behind and make it their own. And that's exactly what happened when Prashant first encountered Fundbox. So here's someone who had already built an incredible career, a PhD from Stanford, product leadership roles at Google, Facebook, Yahoo. He was the chief product officer at Flurry when Yahoo acquired it for hundreds of millions of dollars. He could have stayed comfortable in the advertising world and all the big tech and optimizing algorithms and managing massive teams. But instead, he decided he was going to walk away from it all and join Fundbox as the chief operating officer in 2016. And eventually, he became the CEO in 2020. Now, what makes Prashant's story super compelling isn't just his technical background or his academic credentials. It's really his ability to see potential while others see lots of complexity. And at Fundbox, that's helped over 125,000 small businesses access more than $5 billion in working capital. He's taken his experience building products for billions of users and focused it on solving cash flow problems for the businesses that are actually driving our economy. The man who once managed Google's products across Asia Pacific, built Facebook's advertising platform. Now he spends his time thinking about how a restaurant owner can cover payroll or how a contractor can buy supplies before even getting paid. That's the kind of perspective shift that tells you everything about what drives him. And today, you're going to hear how Prashant built a leadership culture where decisions are shared and feedback flows freely. He'll walk us through what makes the perfect Fundbox customer, why embedding financial tools into existing business software matters more than building standalone apps. We'll also explore his partnership strategy from QuickBooks integrations to bank portal launches that are happening later this year. Most importantly, you'll understand his vision for how small businesses will access capital over the next 3 to 5 years and why responsible lending standards remain a non-negotiable, even as the industry scales. So, Prashant, I'm excited to dive into all of these different things with you. This is an area that I've had a lot of experience in. I mean, I still remember launching one of the first merchant cash advance products that were tied to credit card processing that went on to just go gangbusters in the industry. So I'm super excited to learn more about you and about Fundbox.
Thank you, Ted, and thank you for that overly generous introduction. Likewise, I'm excited to be here and share whatever little I've learned along the way with you and your audience.
Having worked with hundreds of fintech companies and their go-to-market strategies, I've seen how challenging the SMB space can be. I mean, let's start with context, right? The space you operate in, your path to Fundbox is unique. You weren't the founder, but connected deeply with the mission. You came from senior roles that we talked about, and you were ready to build it. Now, your original meeting we were talking about as we were preparing for this, your original meeting with the founder of Fundbox wasn't exactly perfect, but it did spark a shared vision for what led to you eventually becoming CEO. I would like to understand and have everybody listening here understand, when you first connected with Fundbox, what was it about the mission that resonated the most with you?
What I saw in Fundbox from the very early days was the role that technology could play to level the playing field between small businesses and large enterprises when it came to access to a very critical financial service, which is working capital. I'd spent a lot of time in advertising products, building early parts of Google AdWords, and I had seen firsthand how technology could level the playing field in advertising. And the thought I had was, why couldn't the same thing hold true for other important things for a small business? And clearly capital was one of them. That's what drew me to Fundbox from day one.
It's interesting how a personal perspective of something completely outside of the box changes the way that you look at things. What do you think the most misunderstood thing about serving SMBs in financial services is?
A lot of people correctly understand that serving SMBs is challenging, but very often they don't realize why it's challenging. Small business owners are serious about what they're doing. They're dedicated to their craft. They're dedicated to their small business. However, they are trying to do single-handedly or often with a very small team what a mid-market or enterprise has an entire function devoted to. You've got a CFO and the office of the CFO doing all sorts of things, looking at accounts payable, looking at accounts receivable, managing the books. And that's all being done by one person, or maybe two people at a small business. People aren't just desperate for capital, they're also desperate for time. A problem that goes beyond the specific service like capital, it is about how do we simplify the life of the small business owner to let them focus on what they want to focus on and what they're good at, while taking care of some of the administrative things that may not be why they built that business in the first place.
What observations about the challenges that SMBs face that you've seen that typically go unspoken, and it's kind of an moment you're like, oh my gosh, if they would have only told me this or only told us this, we could have solved that so much sooner?
Very often SMBs see opportunity in front of them. The ability to grow by making an additional hire or by flying to another city for a trade show to be able to demonstrate kind of what they're doing. And these opportunities all have positive ROI. However, the inability to articulate what their business could do with additional funding to a bank or a traditional financial institution often holds back a small business owner. And we want to be there as Fundbox when a business owner sees an opportunity where by buying that additional espresso machine, they know they can grow their in-store sales. Or by flying to another city, they can close an important contract that will help them grow. So we want to be there when these small businesses see opportunity every time. And especially if that opportunity is held back because of a delay, latency in funds flow. What I mean by that is today, small businesses are owed over $1 trillion in unpaid invoices in the US alone. So when we talk about small business capital being $1 trillion opportunity, the money is right there. They're often owed money and they have the opportunity. They cannot connect the two.
With the diverse levels of things that the SMBs need and understanding those challenges, helping a team understand that and to know how to execute on that means leading them through it. And I found it really interesting that your perspective on leadership really has been grounded in openness and collaboration. And it was really fun to hear you talk about as we were preparing for this, that you've built a leadership team where decisions are shared and conversations happen really as equals. And your view on the CEO role isn't just about isolating and focusing on a couple things but it's really about creating a culture where feedback isn't only allowed, it's expected, it's extremely welcome. And you see that as a way of deepening the level of trust between everybody. The leadership principles really remind me of frameworks that I use when I'm advising for fintech companies. And whenever they're trying to figure out how do we scale this, we always look first at the culture. Is the culture set up in order to be able to scale the business? Is the culture able to take it to that next level? What, in your own words, what kind of leadership structure have you built around you?
I'd say that the leadership culture at Fundbox is reflective of the company as a whole, underpinned by some shared excitement and commitment to our mission, a set of values in how we work with each other, including transparency and empathy, and then a set of operating principles which help us convert our conversations and thoughts into execution. Each person at Fundbox is an asset. And ironically, in a world where AI and automation means that companies don't need to hire as many people as they might have 5 or 10 years ago, the importance of each individual person actually increases with a smaller team as opposed to decreases. Those very principles and values that I share with the people I work with on a daily basis are also shared by them with their teams and so on. And I hope it cascades across the company. I think it does. Where every one of our 200 people is motivated by what we do. This is obviously a job and a career, but it goes a little beyond that. They're very plugged into what's happening at the company, all the good and all the bad, all the challenges that we face. And they feel a sense of joint ownership and responsibility in serving the company and helping us serve our small business customers.
Support provided by Skyflow. What if you could build fast but not break privacy? What if you could ensure data privacy, governance, and compliance with just a few API calls? What if you could worry less about PCI requirements while actually improving privacy and security? How much more time would your team have to truly innovate? How much faster could you build and ship new features? How much more powerful could your app be? Skyflow is a zero-trust data privacy vault delivered as an API. Skyflow's radically simple design lets you collect, secure, and tokenize personal information like card data and payment details. And with built-in features like encrypted data analysis and sharing, anonymization, and advanced governance, your days of choosing between data security and data usability are over. Whether you're just concerned with PCI compliance or need to go further to include CCPA, GDPR, SOC 2, and beyond, Skyflow has you covered. What if you could build fast but not break privacy? With Skyflow, you can. Visit skyflowsecure.com today to learn how.
How do you ensure that the team feels comfortable and, more importantly, empowered to offer real feedback and ideas, not just the ones that they know are going to get a yes?
People feel empowered when they feel they're being listened to. And listening is an active thing, and listening is not easy. But every time I have a conversation, or any other leader in the company has a conversation with someone who brings forward an idea or an opinion, and there's an active conversation around it, and then there's often action taken on that idea, people walk away thinking and knowing that what they believe in and what they bring to the table matters. Ultimately, you can always talk about all of these leadership values and principles, but people will look at not what you say, but what you do. There is no substitute for doing when it comes to building a culture. And we try to embody our culture in the actions that we take.
Last night, I had the opportunity to sit down with Bob Olson, the former chief customer officer at GoDaddy, and a couple other former executives. And, we really talked about the importance of trust and the importance of that to give the autonomy to the teams and everything. But one of the things that brought up as a C-level exec, and even I know personally as a CEO as well, you have to figure out ways to overcome isolation, because you get so focused on the one or two or three key things that you've got to get done. You get into, if you don't watch, you end up into an echo chamber of all the things that you want to hear, you want to see. How are you overcoming isolation, and how are you leveraging the autonomy and trust that you give your team to make that happen?
A simple example is that our leadership team gets together on a huddle every morning, and we may spend 5, 10, 15, 20 minutes, maybe an hour. And we look at each other in the eye and ask each other, what are topics that are critical to you? What's on your mind? And it could be someone in the company who needs to be paid attention to. It could be a project. It could be a partner. It could be a competitor. It could be something that someone read about the economy. All of these are topics we bring up and talk about, such that I and the 5 other folks in the leadership team are in sync at all times. And that's one way to prevent isolation that you talked about.
Do you feel like that also creates environment of psychological safety? That's another thing Bob and I were talking about last night too, is that when you bring people in, whether they're new or as they move up through the ranks, there's always a little bit of PTSD about maybe a bad decision that they've made in the past. How do you see that leadership huddle as a way to really create that safety? And does that cascade down throughout the rest of the teams?
Having these conversations with your peers on just a regular basis about a variety of topics helps open people up. Different folks in our leadership team have expertise in different areas. Our CFO has great experience, for example, in capital markets. Our CTO is obviously a technologist and understands where technology is going. Our COO understands our people, understands our partners, and so on. And so having someone explain or share what they're doing, like let's say an important engineering effort, and explaining it in a way that the rest of us can understand and appreciate is expected. And the message that I share around this is we can all go and work at big companies and, to your point earlier, Ted, work in our own silos. But one of the joys of working in a small company is if you're intellectually curious, you can look around and see what's going on. Our COO can talk to our CTO and understand what Kubernetes is. Our CTO can talk to our CFO and say, what is this forward flow that you're talking about? Explain it to me. So if you're intellectually curious, working at a small company where you can look across all the functions and have those conversations just to learn, just for the joy of learning itself.
In my advisory work with startups and retailers, and it's really a number of different areas that we help businesses just grow. But customer segmentation is often, and understanding how to listen to those segments differently is often where they struggle the most. Shared about the culture and the types of customers that you go after in the SMB. It's really nice to see that you're not looking at SMB as just a generic play. You've really dove in to identify a very specific segment of business. I think we were talking before, like fewer than 50 employees. They have cash flow. It may not be consistent, and they need to figure out how to fill those gaps. And, there are tools that they're already using, like QuickBooks and Stripe, that, really, that tells them a lot about what they're doing, but it really doesn't help them with that daily cash flow. We touched on it really highly here and a little bit earlier, but I would really like if we could dive in to understand who is the ideal Fundbox customer.
The ideal Fundbox customer is a small business owner who is managing a team of one as a sole proprietor on the small end to maybe 20 to 50 employees. I think once you get past 100, you typically have a more robust finance function to take care of some of these things. Their revenues may be as little as a few tens of thousands of dollars a year, all the way up to maybe $5 or $10 million, already using or starting to use some sort of digital or digitally enabled tool to help them run and grow their business. It can be a digital accounting package like a QuickBooks, a digital first payment platform like a Stripe, some vertical SaaS package like a House Call Pro, or a neobank like a Bluevine. And these small businesses happen to be using one of these platforms or multiple of these platforms that we're already integrated into and connected with.
We'll start with this first one. What do you see as the most common use cases for the capital that you provide? We'll start there, and then I got another fun question.
One of the most common use cases for capital is payroll. I've learned that small businesses think about payroll very differently when they move from having contractors to having employees. If I run my business with contractors and I'm late in getting paid, I'll just tell my contractors that, sorry, the money hasn't come yet. I'll pay you when the money comes. But if I have employees, our customers, our small business owners take that very seriously. And it's a matter of pride, it's a matter of honor to pay your employees on time. So even if your client is late in paying you, you want to make sure that you run payroll on time. And a lot of our customers would rather not pay themselves but make sure that their employees get paid first. And so one of the common use cases is payroll, driven by volatility in incoming cash flow. And of course, there are many other situations. There could be an unexpected need for cash. You're a trucking company and now your truck's in the shop and it's going to take $15,000 to fix your truck. You are a coffee shop and you need to buy a new espresso machine. Then there are use cases that deal with opportunity. You've just found a new vendor that can ship you inventory, but they need an upfront deposit. Or it's the travel for a trade show. It's buying new equipment. So you see use cases that are both there is cash flow volatility and I need to be able to make a recurring expense. I have an unexpected expense that is critical for me to be able to run my business or keep running my business. Or it could be there's an opportunity that I want to invest in and the ROI is high and I know it. But I don't have the capital to be able to invest.
All right. So here's the fun question. What is the most unique use of the capital that you have seen so far?
A unique and interesting use of the capital that we see all the time, but is somewhat unexpected, is people using capital from Fundbox to provide financing for their customers. So imagine that you are a B2B business. And I say B2B, you're a small business, but your customers are other businesses. They're coming to you and saying, can you give us net 30? Can you give us trade credit? Can you give us the product now and we'll pay you in 30, 60 days? And you're thinking, geez, I'd love to do that because I really want their business. But if I wait for 30 days, it's going to crunch me on my own cash flow. Well, let me draw funds from Fundbox. And because Fundbox is super flexible, I know I can pay Fundbox back in 30 days when I get paid by my customer without any prepayment penalties and things like that. So let me draw funds from Fundbox. And whatever I'm paying by way of fees, I can include that in my invoice to my customer. So I can mark up my service, give my customer the 30 or 60-day terms that they're looking for, and close that business. It's not unique, by the way. People do it all the time, but it's unexpected.
I know you weren't directly mentioning it just a moment ago, but you talked about meeting, and I hate using this phrase, but I'm going to do it anyways, meeting the customer where they're at. This is my most disliked phrase, but I can't think of a better one right now. It's important when you start to talk about that access to this working capital gets embedded within the tools that they already use. You listed off a number of them. How has that changed the way Fundbox goes to market?
Our focus on embedding financing solutions inside of the tools that our SMB customers already use drives not only our go-to-market, but our entire business strategy, our entire product strategy, the whole company, in short. For example, we don't spend any money in direct marketing. We're not running ads on Google or on social networks.
From the gentleman who built the platform, I'm not using I found that hilarious.
I think it leads to a very cash efficient customer acquisition because we're not spending money in direct customer acquisition. And we see a customer inside of their environment or the tools that they use, we can access the data from the platform to underwrite them. So rather than approaching them and saying, hey, sign up for Fundbox and let's see how much we can give you by way of a loan or a line of credit or whatever it is, we can come to them with an offer where they're already pre-approved or pre-qualified for something that makes sense to them. By using the same data to underwrite, and these are always on data connections, so we keep seeing our customers and their financial health as they grow and as they evolve, we can provide them better terms, better access, and importantly, as their business evolves, keep adjusting what we can offer them based on the health of their business. So more often than not, usually it's all good news where a business is growing and we can maybe increase their line size, reduce their pricing, give them better terms, all of that kind of thing. Once in a while, we do see businesses that are getting stretched, and that's a different conversation around what's a responsible amount of credit that someone should be using. But all of these things around accessing the customer, coming to them with an offer, and then even after they sign up for Fundbox, how do we keep working with them, is hugely influenced by our approach of working inside of the platforms that they already use.
Not looking through the customer acquisition through a general channel. You're not hoping that they give you the right information. You're really diving in and basically, we talked about isolation of executives and leadership. You're also not isolating the product and the customers as well. A really great approach by embedding into existing tools that they already have is a great distribution model. But I know that there are going to be folks that are watching and listening. They're like, fantastic, Ted. I love what Prashant is saying. But what does a great partner look like for Fundbox?
Our partners and our great partners are those that serve small businesses, that serve them well, and that have a deep engagement with their small business customers. That's helpful for us because when we integrate with a partner, the more we can learn about their small business customers through the data that the platform has, the better a job that we can do. When we embed our solutions inside of their experiences, the deeper the engagement they have with their customers, the more often and the more relevant can be the offers that we share with those customers. And the more trust there is, and trust is an important word here, between the small business customer and the platform that they're using, the more likely that small business owner is going to be to choose financing inside of the platform versus going somewhere else. A great partner is someone who ideally serves a large number of small businesses in a way that drives deep engagement, in a way where there is some amount of information and insight into the health of that small business, and where that relationship is one of trust. And we're proud that many of our partners, I'd say virtually all of them, satisfied those criteria.
So you talked about why embedding into these existing ecosystems matter for your model and for the customers and for the partners. But help us understand, if I'm looking at my software and I think, hey, I want to offer something like this, what kinds of customer data make it an obvious choice versus one that maybe might work, but not the best fit?
We've spent a lot of time in working with different kinds of data that we can use to assess the health of a small business. And we've done that not because we wanted to do it, but because we had to do it, because we work with different kinds of partners. We have partners that are accounting software packages, again, folks like QuickBooks, where we can assess the health of a small business based on the ledger data. So we have models on ledger data. We work with payment providers like Stripe. So we built machine learning models that use payment data. We work with invoicing apps with names like Invoice Simple and Joist and so on, where we use invoicing data. We also work with partners that don't necessarily have a lot of structured data themselves, but where there's enough trust with the small business customer, where the small business customer can share their bank account data with us, and we can use transactions in their business bank account and run cash flow models to assess their health. So there are a number of tools that we can use to be able to drive some sort of insights into a small business. And while I mentioned those three things, huge scale helps us, like lots of small businesses. Deep engagement helps us, and trust also helps us. I think we can use those three in different levels to be able to get the information we need to make a decision.
aligns nearly perfectly with the work that I use in my advisory practice and consistently provides success in that piece of it. And understanding the distribution partners very, very early tends to, and in being very specific, right? So you probably started focusing on the folks who had the most amount of data. And then you're like, well, let's figure out how we can do with less and a little bit less and a little bit less. And then going out into those trust areas. And I think that's where companies, when they're looking, how do I scale my partnership program or who do I partner with? Make sure that both sides are looking at it, and you can build those through partnerships a heck of a lot faster, a heck of a lot more robust and profitable than trying to build a channel direct. As you mentioned before, doing the direct acquisition is expensive. It's hard. You miss more than you hit. And I think that is a big piece. And I love how you're positioning this, looking a little bit ahead of what's going on with your current customer.
I'd agree 100% that the partnership approach has worked very well for us. I will say, though, that it's not the only way. Going direct to customers is a viable strategy, but there are some very significant differences. Your small business customer, especially one that's a sole proprietor or with 5 or 10 employees, doesn't necessarily want to work with 10 or 20 different systems. They want simplicity. They want everything in one place. So if you're trying to go direct, it's better if you have a one-stop shop. And we have partners who go direct. So a vertical SaaS player like a Jobber or a House Call Pro or what have you, they acquire customers through direct channels. But when they acquire that customer, they're offering a variety of services in order to be able to derive enough value from the relationship to cover the cost of customer acquisition. And that's a perfectly fine strategy. That's a vertical strategy where you're a one-stop shop. Now, for us, we're not trying to provide an end-to-end solution for everything. We're not providing invoicing ourselves. We're not providing a payment card ourselves. We're not providing a checking account. We're a capital layer, so we're more horizontal. We partner with all of these vertical players, and we're a tool in their toolkit to provide that one-stop shop. So I don't want to send a message that the only way to go is through partnerships and embedding. There's also a direct play to be made, but the direct play has a number of implications around what you're approaching the small business owner with and how comprehensive is your offering. And oh, by the way, it's very difficult to build a complete offering, which is where embedded fintech comes in. And folks like us can help you get to that one-stop shop.
You're building a fintech product. You want to offer digital assets, but wallets? That's the hard part. Security, compliance, key orchestration, blockchain integration. That's why fintechs, payment platforms, and custodians choose Dfns. They provide wallets as a service that's API first, multi-chain by design, and secured with MPC. No single point of failure. So you can launch across over 50 blockchains, automate policy controls, and stay audit ready without managing private keys. Stripe's Bridge powers crypto payments through Dfns. MoonPay scales wallets securely with Dfns. Sphere grew without compromising on control or compliance. Even major FIs like Fidelity, ABN AMRO, as well as custodians like Zodia and Tungsten trust Dfns to power their on-chain infrastructure. Developer ready, compliance approved, production grade from day one. If you're building in payments, exchanges, OTC desks, market makers, or DeFi, Dfns wallets work the way you need them to. Request your demo at fintechconfidential.com/DFNS. Dfns, secure wallets built right.
I come from the perspective of the business to business, the infrastructure. Like, my whole career has been around figuring out how to get all the infrastructure pieces to play together to deliver that fantastic, that delightful product to the end consumer. And a lot of times I tend to forget that that is still a viable option. That still is a viable way to go, and that there is a future in that too. It just depends, like you mentioned, are you going to be a vertically integrated company or are you going to be a horizontal player in that? And I like how you position that. Well, we've come to that time of the show, Prashant, where I pull out my fun crystal ball and I want you to look deep into it. I want you to take us few years down the road. Look 3, 5, heck, you can look further if you really want to. And I want you to go and see what you see and then come back and tell us your unique perspective on where embedded finance is headed for small businesses and what trends you see coming that Fundbox is evolving to meet that future.
First, I love your crystal ball. And when I look into it, what I see is a few trends of the world. Small businesses are getting increasingly digitalized. 5 years from now, 95%, the vast majority of SMBs are going to be using one or more digital tools to run and grow. So that's going to happen. 2, that space is maturing. And when technology disrupts a space, you usually find that there are a smaller number of players who benefit disproportionately because technology scales. So I do see a smaller number of highly successful platforms. And I don't just mean 1 or 2, but it's not like 1,000. You'd probably sort of count them in double digits who will be here to stay for a long time in serving small businesses. And I see embedded finance being not just a US specific thing or a Western European thing, but a very global approach. And I also see, and this is where I'm a little biased, I see Fundbox as being one of those enduring platforms that is serving small businesses at scale. And you mentioned that we have already served 125,000 SMBs. Well, that number is a little bit dated. It's more than 150,000 SMBs now. But 5 years from now, 10 years from now, that number should be at least 10x of where we are today.
When you look forward, I mean, you talked about global, you talked about giving them more features, more functions, all of that. Do you see that being easier or harder? Because, I mean, responsible lending standards are changing frequently. Well, at least for banking, they're changing frequently for banking, right? Not technology based, but enough to cause a little bit of heartburn for chief risk officers. Do you see that changing the way that you approach it? Or is that just something that allows you to identify a way to serve the customer better?
We have a very simple approach to what you're calling responsible lending, which is how aligned are our incentives with the incentives of the partner and the incentives of the small business owner. A lot of the bad in lending, predatory practices, for example, happen when those incentives are not aligned. If a lender does about as well economically with a small business, whether the small business succeeds or fails, that is not alignment of incentives. In fact, some predatory lenders may do even better if the small business owner fails because of some sort of guarantee or lien or what have you. The way we built our business is by having customers who use us over and over and over again. Our average repeat customer uses us 6 or 7 times a year. And for many, many, many years, we have customers using us who started using Fundbox 10 years ago when we started the relationship with QuickBooks. And those are our best customers because they have a need that we satisfy. And as they grow, we grow with them. So for us, keeping that alignment of incentives with the small business customer and our partner, we believe is a very good recipe for making the right decisions that drive joint success. And I think responsible lending falls under that. As a lender, you don't want to provide an irresponsible amount of capital because you may lose it and you may also hurt the health of your small business customer. So if you're thinking about each customer relationship as a long-term partnership, I think those incentives drive the right kind of behaviors.
How are you seeing education and transparency evolve when it comes to SMBs in general?
I think small business owners are evolving like all of us. The number of new business starts more than doubled during the pandemic. And unlike other pandemic era changes that are kind of being rolled back a little bit, the number of new business starts and new business formation is still very high, much more than it was 10 years ago. So I do think that more and more people are opting to do their own thing, run their own business. And with the tools that are available to them, I think that's getting a little bit easier. It's still not easy. Running a small business is challenging, but also very rewarding. And so I think a lot of the education and the learnings from other parts of the economy are being brought to small business. Today's small business owner wants the same kind of convenience, speed, and access that they are used to with their consumer products. So if I can swipe a card and make a purchase and have that be translated into a pay in 4 installment plan, I want similar flexibility when I run my small business and procure a piece of equipment or make payroll. And those are the kinds of things that we provide for our SMB customers. Transparency is important because it ties back to trust. And if customers don't trust a platform or their financing partner, they're going to take their business somewhere else. We operate in a highly competitive space. And I think it's good because it keeps us honest. It keeps us on our toes. It keeps us thinking all the time about how do we get better. So overall, I do believe that factors like transparency, trust, but also speed, convenience, value are driving innovations in what we do because we think about this every single day.
Speaking of innovation, every day there's someone who finds a problem that they feel like they've just got to solve. No matter how boring or sexy it is, they find that problem that they just have to solve. If you were to give advice to a founder, and it could be small business, it could be fintech, it could be big tech, but a founder, if you give them one piece of advice, and it's the only piece of advice they could use going forward, what would it be? And in only one sentence?
Only start a company if you value the impact you can make and the lessons that you can learn. And do not ever start a company because you think it will be a highly positive financial ROI decision.
Prashant, this conversation with you, I mean, it truly reinforces why I'm really passionate about working with fintech leaders who not only understand the technical side, but also the human and empathetic side of financial services. And I really appreciate your insights on how you're approaching this market, how you're looking to support these small business owners. And it definitely is going to influence the way that I advise companies in and that work with SMB space folks. The way you approach the leadership, the way you approach the customer. I mean, there are just so many things in here. And not only that, but you're providing a service that the customer just has to have in order to keep moving forward. And that means a lot.
Thank you, Ted. Thank you for having me. I really enjoyed the conversation. And for anybody out there who wants to follow up, please look me up on LinkedIn and message me. Would be happy to continue the conversation.
So for those fintech and founders and executives listening, if today's conversation has sparked ideas about your own growth strategy, partnership approach, or leadership structure, I mean, I'd love to continue that conversation, that discussion with you. Just like Prashant, you can reach out to me on LinkedIn, and I would love to have that conversation with you to figure out how we can help you move forward. And I also want to thank you for sticking around with us on this episode of Leaders One-on-One. These conversations, really, they're designed to give you more than just the service level sound bites. They're here to show you how real operators think, the way they lead, and the way they make things happen in fintech. And of course, if you got some value from today's episode, make sure that you've subscribed and you don't miss the next one. And you can always find us on YouTube, Spotify, or any place that you like to listen to podcasts. And if you want to dive deeper into what we're tracking behind the scenes, go ahead and sign up for fintechconfidential.com. And also, you've got to share this with someone who's really serious about where fintech is going. As always, I like to leave you with keep moving forward.
As we wrap up today's episode, I've got one last thing for you. If you're in the trenches fighting fraud and financial crime, you know it's a complex battlefield. That's where Hawk's AI tools for real-time payment screening, AML, transaction monitoring, and dynamic customer risk rating come into play. These aren't just buzzwords. They're game changers designed to make your compliance more effective and less of a headache. Imagine slashing through false positives with precision and giving your compliance strategy the edge it needs. Head on over to gethawk.com to sign up for a demo and discover how their platform can revolutionize how you fight fraud and financial crime.
This has been a production of DD3 Media, with all rights reserved. This is provided for informational purposes only. It is not offered or intended to be used as legal, tax, investment, financial, or other advice. We strive to provide accurate and up-to-date information, but will not be responsible for any missing facts or inaccurate information. You comply and understand that you should use any of this information at your own risk. Cryptocurrencies are highly volatile financial assets, so research and make your own financial decisions.